The U.S. dollar is mixed against the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar. I'll take a look at those three currency pairs to kickstart the U.S. trading session and the new trading week. So let's get started. Looking at the euro versus U.S. dollar on the hourly chart, we saw in trading last week that the price moved up toward this blue line. This blue line represents the 100-day moving average, and each time the price moved up to that level on Thursday, and then Friday we got close to it as well. We found early sellers against that moving average. Those high prices were also in this swing area through here. That swing area went back in time. If I bring it back through here, you can see it goes all the way back to this point in mid-September, and then we formed this floor through here, which is basically where it came. We moved a little bit above it, but the 100-day moving average is in play here. In last week's trading, we came up to that area and found willing sellers against that level. So that's its derivation of that yellow area, and also the blue line, of course, is the 100-day moving average. And moved back down in trading on Friday and into today. Has seen the price extend below the 100-hour moving average. That's this blue line right here. That level comes in at 1.16037. We also fell back below the 50% retracement of this last move to the downside, which took the price from this high right here down to the low price right there, and 50% comes in around just under the 1.16 level. So we're trading above and below the 100-hour moving average and trading here today with the market trying to figure out which way it wants to go. Below that area, we have this other swing area through here, and also the 200-hour moving average down below. So staying below the 100-hour moving average gives the sellers a little bit of a bias to the downside. Add that 50% retracement, but we do have the 200-hour moving average below that could cause some problems. That moving average is also moving to the upside. So if we're able to stay below 100, we'll likely go down and test the 200-hour moving average, and we'll see what the market really wants to do at that level. Does it want to switch the bias more to the downside, moving below that moving average, or do we want to find support against that level and start its rotation back to the upside and ultimately break above the 100-hour moving average? Of course, if we do break above the 100-hour moving average, we'll look toward the 61.8% retracement and then back up toward the 100-day moving average. So let's take a look at the dollar versus yen next. I know this currency pair had a wild ride on Friday with the stock market falling and then rising. Risk off sent the pair to the downside, breaking below the 100 and 200-hour moving average in the process, and moving down toward our low prices through here. But then snapback rally with the stock market moving back to the upside, taking the price back above this old ceiling area, this old right through here, which will form this nice ceiling right there. You can see it all there, and then we extend it through here. Here we'll take it all the way to the end here. Admittedly, on both Thursday and Friday, the price traded above below that old level as the market trying to figure out what it wanted to do, and then made the break to the downside. But note what happened in trading here today near the low price in the Asian Pacific session. We did break below both the 100-hour moving average and this old ceiling level, which becomes a floor, but only briefly, and the price has since rotated back to the upside. We're going to need to get below these levels in order to tilt the bias more to the downside. If we can't do that, then the bias remains more to the upside, and we'll look toward our high price that we saw in trading last week of 155.04 as the next key target on the top side. Take a look at the daily chart. Where does that take us? Right here, which is above this little swingy area target near 154.77 or 79. Let's call it 154.80. We're currently trading just above that level, so the buyers are trying to make a play here, get above the highs. It's really open road ahead for the dollar versus yen. There's not a lot of resistance off of this chart. Doesn't mean that there isn't resistance, but there's you'd have to go all the way up to like 156.73 to get to something firm as far as the resistance goes for the currency pair. So just be aware of that dynamic. Finally, let's take a look at the sterling versus US dollar. Really sharp moves up and down on Friday's trade. During the week, we did move above the 38.2% retracement of this last move to the downside, which took the price from the mid-October high to this low. 38.2% retracement was holding, or doing a pretty good job of holding, and admittedly we then moved above it, but we failed. We tried to move it above it again, and we failed. And in trading here today, we are trying again to move above that 38.2% retracement, and could be failing for the third time. We are currently trading back below that level at 1.3185. The other high swing area going back here comes in at 1.31902. That first swing high after the low, which is important, and so we need to get back above both those levels to increase the bullish buys. If we can't do that, we'll come back down to the 100-hour moving average like we did earlier today. Found support buyers against that level on the second time. Admittedly, we went below it on the first time, but did hold the 200-hour moving average on the downside. This area becomes more of a neutral area if we're able to move back down toward that level. So buyers are taking their shot. I'm not sure they're successful in their shot right now with the failure above that level, but so be aware that we could be more in the up and down of range trading for this currency pair as long as the price remains below that 38.2% retracement. So there you have a look at three major currency pairs to kickstart your U.S. trading session and the new trading week. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.